U.S. plans new tech export curbs on China. The U.S. government is considering expanding export controls on products made with American software that are sold to China. This move could target high-tech manufacturing tools and AI-related software. The policy aims to prevent China from accessing sensitive U.S. technology amid growing tensions. Industry experts warn that broader restrictions could disrupt global supply chains and hurt American tech exports. Major chipmakers and software developers are closely monitoring the situation as the White House weighs new rules to balance innovation, national security, and trade relations. Ex-Biden officials push high-tech over manufacturing. Former Commerce Secretary Gina Raimondo and other Biden-era officials have urged the U.S. to focus on advancing high-tech industries like semiconductors and AI instead of reviving old manufacturing sectors. They argue that America's global competitiveness lies in innovation, research, and intellectual property, not mass production. This shift could influence future funding policies, especially for strategic technologies. Experts say prioritizing emerging tech will strengthen U.S. national security and economic resilience. However, critics warn that ignoring manufacturing could make the nation more dependent on imports for essential hardware components. NVIDIA waits on big tech earnings for market signal. NVIDIA stock showed little movement this week as investors awaited earnings reports from major tech companies like Microsoft, Alphabet, and Amazon. Analysts say NVIDIA's next growth phase depends on whether these companies continue investing in AI infrastructure. With data center demand still rising, NVIDIA's GPUs remain essential for generative AI applications. However, market analysts warn that if corporate spending slows, NVIDIA's explosive revenue growth could face headwinds. Investors are also watching for updates on NVIDIA's next-generation AI chips, which could strengthen its dominance in the semiconductor market. Tech stocks lead Wall Street decline. U.S. stock markets fell sharply on Wednesday, led by declines in major technology stocks. Renewed U.S. China trade tensions and cautious corporate earnings weighed heavily on investor sentiment. The Dow Jones Industrial Average dropped over 300 points, while the Nasdaq and S&P 500 also closed lower. Analysts said investors are rotating away from high-growth tech stocks amid fears of stricter trade restrictions and higher borrowing costs. Despite the pullback, some traders see this as a temporary correction in an otherwise strong tech rally. Netflix shares plunged 10% after weak outlook. Netflix shares dropped about 10% after the company's latest quarterly earnings disappointed investors. Although subscriber growth remained steady, revenue and guidance fell short of Wall Street expectations. Analysts cited weak content performance and increased competition from other streaming services like Disney Plus and Amazon Prime Video. Netflix executives said they plan to invest more in original series and advertising-supported tiers to boost profitability. The sharp decline dragged down broader entertainment and tech stocks, raising concerns about consumer spending in the digital entertainment market. U.S. to speed up tech transfers to allies. The U.S. government plans to accelerate defense technology transfers to key allies such as Taiwan and Japan. The policy aims to strengthen global supply chains for semiconductors and advanced defense systems amid growing tensions with China. By loosening certain export restrictions, Washington hopes to enhance military and technological cooperation with trusted partners. Analysts say the move highlights how tech policy is becoming deeply tied to national security. Defense contractors and semiconductor firms could benefit from faster licensing and joint development programs. Gartner, generative AI spending to hit $14.2 billion in 2025. A new Gartner report predicts enterprise spending on generative AI will reach $14.2 billion in 2025, driven by specialized models for healthcare, finance, and manufacturing. The firm says businesses are shifting from general AI platforms to domain-specific language models designed for specific industries. These DSLMs improve accuracy and efficiency compared to general-purpose tools. However, Gartner warns that most companies still struggle with data quality and integration challenges. The report highlights growing demand for AI governance tools and cybersecurity measures to protect enterprise data from misuse. Figure Technologies to join Goldman Sachs event. Figure Technologies, a blockchain-based finance firm, announced its participation in a virtual fireside chat hosted by Goldman Sachs. The company's CEO and CFO will discuss tokenized assets and blockchain's future in financial services. Figure's platform allows digital lending and asset management using blockchain for transparency and speed. Analysts say investor interest in decentralized finance, DeFi, is rising again as regulators clarify guidelines. The event signals that traditional financial institutions remain open to partnerships with blockchain innovators despite recent crypto market volatility. Analysts question real-world AI adoption. While AI remains a buzzword across industries, analysts caution that real-world adoption is slower than expected. Many enterprises still lack clear strategies to integrate AI into daily operations. Despite heavy spending on cloud infrastructure and data centers, companies are struggling to turn AI prototypes into scalable products. Experts warn that if this pattern continues, demand for high-end AI chips and software licenses could taper off. Firms like NVIDIA and Microsoft are now focusing on easier deployment tools to speed up enterprise AI integration. U.S. AI and tech regulation evolving rapidly. The U.S. government is moving quickly to update its AI and tech regulations, balancing innovation with national security concerns. Lawmakers are exploring both stricter export controls and flexible frameworks to support AI startups. Senator Ted Cruz recently proposed an AI sandbox to ease restrictions for small tech companies experimenting with new tools. Meanwhile, large corporations are calling for clearer rules on data privacy, intellectual property, and AI safety. The evolving policy landscape could reshape how U.S. tech firms innovate and compete globally in 2026 and beyond. Paramount Skydance to cut 2,000 U.S. jobs. Paramount Skydance is set to lay off around 2,000 U.S. employees starting the week of October 27th as part of a $2 billion cost-cutting plan. The decision follows the company's $8.4 billion merger earlier this year and aims to streamline operations under new leadership. Most cuts will affect marketing, production, and technology departments. The restructuring is expected to be detailed in the upcoming Q3 earnings report on November 10th. Industry analysts say the move highlights ongoing struggles for traditional media companies adapting to streaming-first models, automation, and AI-based production. It reflects a broader cost reduction trend across tech-driven entertainment firms in 2025. Scale AI lays off 200 employees amid overexpansion. AI data training company Scale AI has laid off about 200 employees, or roughly 14% of its workforce, after admitting it expanded too quickly to meet surging demand for generative AI tools. CEO Alexander Wang said the company ramped up capacity too fast, leading to inefficiencies. Scale AI provides data labeling services for firms developing machine learning models, including OpenAI and Anthropic. The layoffs come as venture funding for AI startups slows and clients focus on profitability over growth. Analysts note that even strong AI players are feeling pressure to optimize costs as enterprise adoption remains uneven across industries. Tech industry faces second wave of layoffs. A new report from TechCrunch shows that U.S. tech firms have laid off more than 22,000 employees so far in 2025, signaling a second wave of workforce reductions. Companies such as Google, Meta, and Amazon continue restructuring teams to integrate AI tools and automation. The shift reflects how companies are consolidating roles once handled by humans, especially in support and analytics. Analysts say this phase of layoffs differs from 2023's downsizing. It's now driven less by pandemic recovery and more by technology efficiency. Despite short-term job losses, experts believe the reshuffle could create new opportunities in AI operations and data management roles. H-1B visa delays worry U.S. tech startups. The looming threat of a U.S. government shutdown has sparked concerns among tech startups relying on H-1B visa holders. Many fear that immigration processing delays could disrupt operations and product launches. Startup founders say a prolonged shutdown could freeze visa renewals, preventing skilled engineers from continuing their work. Analysts warn this could slow innovation, especially in AI, robotics, and software development sectors that depend on global talent. Industry leaders are urging lawmakers to prioritize immigration reforms to protect America's competitiveness in technology. The uncertainty adds pressure on startups already managing economic volatility and tighter funding conditions. AI shakeup hits Austin tech giant. An Austin-based tech conglomerate has announced a major restructuring, cutting about 1,300 jobs across its subsidiaries, including Indeed and Glassdoor. The move follows a strategic shift toward artificial intelligence and automation tools aimed at improving recruitment platforms. Company officials said the layoffs will allow reinvestment into AI-driven hiring systems that match candidates more efficiently. Local analysts say Austin's tech community, once booming with job growth, is now facing its toughest year since 2020. The layoffs underline the broader transformation across the U.S. tech sector, prioritizing AI integration and cost efficiency over rapid hiring and expansion.